Welcome to my channel where I talk about AI, tech, and the stock market daily. Today, I wanted to dive into a major topic in the cryptocurrency world, Bitcoin's ongoing bull run, which is showing extraordinary momentum right now. As of November 12, 2024, Bitcoin is trading around the $80,000 mark, following a sharp rally in recent days. A notable trigger for this latest surge? Donald Trump's recent election victory, which has ignited expectations for deregulation across financial markets, potentially benefiting cryptocurrencies. Many investors are now asking, how long might this rally continue? In this episode, we'll examine Bitcoin's historical bull cycles over the last 15 years to see what patterns emerge, and we'll use that information, along with recent market indicators, to explore how long this bull run could realistically last. Bitcoin's history is marked by a series of intense bull runs and equally fierce corrections. Since its inception, we've observed several major price cycles, often linked to Bitcoin's halving events that cut mining rewards in half. These events typically reduce the asset's supply and create upward pressure on prices, driving up demand in anticipation of limited supply. But historical cycles aside, there's no denying that Bitcoin's sharp climb in the last few days is largely a response to Trump's victory. Investors are eyeing this shift in the political landscape, anticipating that it may bring a friendlier stance toward digital assets in the U.S. market. Let's start with Bitcoin's earliest bull market in 2011. Back then, Bitcoin jumped from less than $1 to over $30 within a few months, an astounding 3,000% increase. But that rally was short-lived. Bitcoin quickly dropped back down, losing over 90% of its value. The entire cycle, from start to peak to a full correction, spanned roughly 1 year. At the time, Bitcoin's volatility was partly due to low trading volumes and limited adoption, with the market primarily driven by small-scale retail investors and early tech enthusiasts. Moving ahead to 2013, Bitcoin had two remarkable bull runs within a single year. In the spring, Bitcoin surged from around $13 to nearly $266, only to fall back to around $70, a steep 75% correction. The second rally, however, was even stronger, with Bitcoin climbing to over $1,100 by December 2013. Both of these 2013 cycles were fueled by early retail speculation and Bitcoin's novelty, drawing widespread media attention and early investors into the space. Notably, each rally was short, lasting only a few months, and neither had the benefit of large-scale institutional backing. The 2017 bull run marked a longer and more mature cycle for Bitcoin, fueled by growing retail adoption and increased attention from institutional investors. From around $1,000 in early January to an all-time high near $20,000 by December, Bitcoin surged nearly 1,900%. This time, the bull run was more sustained, lasting almost a year with a much larger investor base that included early institutions. This cycle also gained massive traction in global media, solidifying Bitcoin's reputation as digital gold. But like earlier cycles, the euphoria was followed by a severe correction, with Bitcoin's value dropping nearly 85% throughout 2018. Economist Alex Kruger remarked, "The 2017 bull run was driven by speculative demand, but it marked a major turning point for Bitcoin as an asset class. As more people entered the space, Bitcoin's cycles grew more structured and sustained with longer bull runs and gradual corrections that have become a hallmark of the maturing market." Then came the 2020 to 2021 bull run, which was Bitcoin's most extended and powerful rally yet. Driven by institutional investment and significant macroeconomic factors, Bitcoin rose from roughly $10,000 in mid-2020 to around $69,000 by November 2021, representing a 590% increase over roughly 18 months. This bull run differed from previous cycles because it was propelled by large institutions entering the space, such as MicroStrategy, Tesla, and Square, which invested billions into Bitcoin. Federal Reserve stimulus policies, low interest rates, and economic concerns driven by the COVID-19 pandemic pushed both retail and institutional investors toward alternative assets like Bitcoin. Hedge fund manager Paul Tudor Jones famously called Bitcoin the fastest horse in the race against inflation, capturing the sentiment that digital assets were a refuge from traditional market volatility. This extended bull run hinted at Bitcoin's potential to mature as an asset class, and its length, over a year, was the longest of any cycle to date. Now that brings us to the current 2024 cycle, which began shortly after the April halving event. Bitcoin has surged significantly in the last week, spurred by expectations of pro-crypto policies under Trump's newly re-established administration. Analysts are already seeing the potential for a prolonged rally. Many have noted that the year following a halving has historically been a strong bull market for Bitcoin, as the reduced supply of newly mined coins drives up demand. But this time, it's clear that Trump's return to the White House has introduced a fresh layer of bullish sentiment, with investors speculating on deregulation that could bring billions in new capital into the market. Charles Edwards of Capriol Investments stated, "A Republican administration could create an atmosphere of deregulation that significantly benefits Bitcoin and the broader crypto market," suggesting that political factors could play a role in extending this bull market even further. Experts are projecting that this rally could see Bitcoin climb to a range between $100,000 and $150,000 by late 2025. According to Bloomberg Intelligence, there's now an estimated 75% chance of spot Bitcoin ETF approval within the next 12 months, a development that could be amplified by Trump's pro-business, pro-market approach. A spot Bitcoin ETF would enable institutional investors to enter the market with greater ease and regulatory safety, and analysts predict it could add billions of dollars in liquidity. Bloomberg analyst James Seyfarth commented, "An ETF approval under a favorable administration could be the tipping point for institutional inflows, possibly extending this bull run into late 2025. Another factor sustaining this rally is Bitcoin's role as an inflation hedge, especially in regions with high currency volatility like Argentina, Venezuela, and Turkey. According to Chainalysis's 2024 Global Crypto Adoption Index, these nations are leading in Bitcoin adoption rates, particularly as inflation concerns drive investors to look for non-traditional asset classes. Even amid regulatory uncertainty in the US, Bitcoin has become a safe haven asset in many parts of the world, a trend likely to extend this bull market's duration. Recent data from Chainalysis shows that Argentina's adoption rate has nearly doubled in the past year alone, with 11% of Argentinians now holding some form of cryptocurrency. Despite the optimism, it's crucial to remember that Bitcoin's bull markets historically don't last forever. While past cycles give us a roadmap, there's always unpredictability in the crypto space. Market sentiment can shift on a dime, particularly if regulatory environments tighten or if economic conditions change dramatically. Tom Lee of Fundstrat warned, while a Republican win could drive up Bitcoin in the short term, the longer-term outlook depends heavily on sustained demand, regulatory support, and broader economic stability. Lee also notes that a Federal Reserve rate cut in 2025 could shift liquidity away from crypto and back into traditional equities, a factor that could shorten the bull run. Looking at historical data, a conservative estimate places this cycle's peak in mid to late 2025, with price targets in the $100,000 to $150,000 range. However, the pro-crypto stance from Trump's administration and the potential for an ETF could extend the rally. This underscores the importance of monitoring regulatory and macroeconomic factors closely, as these will likely influence both the timing and intensity of the bull market's eventual peak. To wrap it all up, while this Bitcoin bull market looks poised to continue, history shows us that sharp corrections are always possible. We're likely in the midst of a strong cycle with new highs on the horizon, but it's wise to approach the market with both excitement and caution. If this analysis helps you understand Bitcoin cycles and today's unique market dynamics, please subscribe to my channel. Thank you, and see you next time. Remember, this information is for reference and not investment advice, as I'm not a licensed financial advisor. Markets are volatile, and conditions can change rapidly, so always base decisions on your own research and risk tolerance.